All right, thank you once again for being here with us, ladies and gentlemen. We really appreciate that you take time off your precious Saturday afternoon to be with us. And you could have easily spent the time, the next hour or so, away from Zoom and with your family. It just shows how serious you are to equip yourself with the relevant insights to position well for the exciting real estate market. For that, ladies and gentlemen, I think you deserve a round of applause for yourself, all right? Now, in a short while, I will be inviting our speaker today online with us. And to make sure that, we keep to our schedule, we will open up for a few questions during the Q&A session towards the end. All right, so now, in case we don't have the chance to answer some of the questions later on, please always feel free to approach the Hutton's agent who has invited you today to attend this webinar. All right, so without further ado, ladies and gentlemen, let me introduce you the speaker for today, Mr. Daryl Owl. Now, Daryl is our Hutton's Group District Director and is also the Dean for Hester Training Academy. As an ACTA holder, Daryl is a trainer for RES course, as well as several CPD courses. He has more than 20 years of experience in the real estate industry, dealing with residential, commercial, and overseas properties. His respectable position and extensive experience has seen him behind several media commentaries, and he has held various senior positions both in the military and the real estate industry as well. Now, his topic today is mastering your eye for investment grade property. Now, Daryl will be helping us understand the different asset classes in property investment and examine what the factors that differentiate the gems from the rest. So, ladies and gentlemen, let's put our hands together to welcome Mr. Daryl Owl. Over to you, Daryl.
Hi, PK, and thank you so much for the introduction. I think you're doing a great job. So right now, hi everybody. My name is Daryl, and it's really a great honor. I want to thank the management for allowing me to take this time to kind of share with everybody what we want to cover today. The topic for today is mastering your eye for investment grade property. Now, this is the disclaimer. As you continue to read the disclaimer, I just want to share with you today what I want to focus primarily, not just about owner-occupied property, but more so is about your next property. How do you invest your property? And I'll be using some example in which is related to my own personal investment. Now, for the last 20 years of my life in the real estate, whenever customer asks me about property investment, they always got this big question mark. And the question mark is always, what do I look for in a property investment? And today, this is exactly what I'm going to do. And the outcome for today's seminar is this, that we hope to understand the different asset class in a property investment. And then the second thing that I want to cover is what are the 5 key factors that you will have to decide when you are investing in property. Now, I just want to assure everybody, today I'm not promoting in any products whatsoever at all. You can just sit back and relax, and this is what I'm going to share with you now. To start with, I want to bring all of you to understand the property market since the day I was born. Okay, so from here you could see that for the last 4 decades, what happens here is that Singapore property market has been trending upwards. Okay, so it has been trending upwards, and you could see that during the past few decades, there are some crises that happens to our economy. For example, in 1996, we have Asian financial crisis. And in Asian financial crisis, we take about 2 years to kind of recover, and then after that we have a sharp rebounds, and then followed by .com, and then after that it go down a little bit, and 911, all of you know what is 911, and it goes to the war, Iraq war, and SARS also happening at the same time. And after that, we see ourselves, the property prices being resilient and continue to push upwards. And it is in 2008, we see that there is a global financial crisis over here. And this global financial crisis, we start to see that our recovery is also V-shaped in terms of resilience. From here, what I'm trying to demonstrate to all of us is that our economy, okay, no matter what, we will continue to face some kind of crisis along the way. However, if you see property, Singapore property as a whole, okay, for the last 4 decades, you could see that there is a good and nice upward trend, okay? So the last low is probably in the 2019, is still higher than the previous low, which is in the 2009. And then the previous low is still, no matter what, higher than 2004. And then 2004 low is still higher than the 1999. So what I'm trying to share with you here is this, that our property market, okay, there is a strong resilience. Yes, we will face some kind of economic crisis, we will face some kind of a pandemic, but as a whole, our property prices will continue the upward trend. So this is something that we want to share with you. So if you have an overall bird's eye view about our whole entire property market, you can see that as long as you invest in Singapore property over a period of time, you will make money. So this is not just what I say. You can see for your chart, and later on, I will tell you there is a reputable person in Singapore that also say the same thing as I do, all right? So right now, I just want to focus on property investments, and I just want to say a word for those people who buy property for their own owner-occupied. We understand that when it comes to owner-occupied property, the consideration somehow is a bit different from the investor point of view. So for investor point of view, generally when we invest in a property, what we are looking for is actually this one word called the yield, all right? In a yield, we understand that there will be a capital appreciation as well as there's a rental yield. However, not all the property yield will give you both the capital appreciation as well as the rental yield. So we have to see, for example, in Singapore, our residential, primarily we are focusing on the capital appreciation. This is similar to the London market as well. So focusing on the capital appreciation. Now, is there rental yield? Of course, there's a rental yield. The issue is when do you come in, all right? If you come in early, yes, you will be able to see a very decent rental yield. However, if you buy now and you rent it now, the rental yield might be not so high. Now, I want to share with you about different asset, understanding the different asset class in a property investment, all right? So now, all of us have HDB. So the asset class of HDB is a great, fantastic passive income, all right? Because it gives you one of the most profitable residential passive income yield if you do compare with any other that you probably own. All right, for me, I share with you my example is 20%. So 20% of rental yield is substantial, okay? In fact, it's quite unheard of. But then again, I want to reinforce this point. I enter really early, okay? And it is because I enter really early, and now over a period of time, the rental also have appreciated. And from here, I could see that I'm reaping and harvesting my decisions to buy when it was really early. Okay. Now, second point, what about capital appreciation? Because when you talk about property investment, we talk about yield. When we talk about yield, we talk about these two factors, right? Because this is the slides I'm showing you. But capital appreciation is good for BTO. Now, I just want to explain what is BTO. This is called build to order. This is when you buy directly from the HDB. So there's this marketing scheme called a BTO. Now, for some of you, you will probably experience that if you buy from BTO, yeah, there's a good premium at the end of the day on the 5th year, when you want to sell after you fulfill your minimum occupation period, that you get this kind of a premium. So However, I also want to urge you that if you are trying to cash, I will urge you to cash out earlier. Okay. Now, for my example, is sell it because I'm going to use that as my passive income. Okay, perpetually, maybe even for my retirement. But for those people who says that I want to sell it out because I want to upgrade to a condominium, then I want to urge you that you seriously must consider selling it earlier, because you must understand this. If you sell it and you have used CPF to finance your purchase of a HDB flat, CPF have a ruling that says that every dollar that you use after you sell it, you need to return back to your CPF account. That's one. Second, you must also return together with your accrued interest. Okay, so this interest you need to pay back to the CPF. Now, don't forget that when you borrow using a HDB loan or a private loan, there is also an interest. So you must understand the interest do kick in. So when the interest kick in, the longer you hold, you start to realize your cash proceeds actually diminish over time. So I just want to show you this chart. From here, you could see for yourself that this is a 7 years property cycle, okay, back to 2013. Now, as a whole, if you look into the whole entire district of Singapore and all the various different HDB, you will see that generally what we are seeing that the price is actually dipping on the downward trend. Okay, but you say that, Darryl, this is very general. So do you have a specific town? Okay, so I go and dig into a specific town and take a look. And this is Pasir Ris, okay, because I live in Pasir Ris and I'm familiar with Pasir Ris, so I want to use Pasir Ris as an example to illustrate my point. So if you could see that, again, this is the 7 year cycle. If you look at it, it is generally following the trend of the general trend that I show you. But what I realized that is suddenly a spike last year. So then I'm very curious. I wonder why there's a spike. So what I did is that I go and did a search and I checked that, oh yeah, actually during that period of time, there are quite a fair bit of people getting on block money, right? The sales proceeds. So a lot of people got a lot of money, right? So they're getting in a lot of money, and then they are also taking some of their time to go and hunt for the property. One case in point is the Tampines Court, right? So Tampines Court got on block, and then their money came in somewhere in the second half of 2018. So not everybody immediately can buy a property. So they will scout around, shop around. So starting from then maybe they can buy. But it is at the same time, a lot of mega projects, the sales proceed for en bloc was also paid out during the beginning of 2019. And for the knowledge of everybody, Pasir Ris has one of the largest collections of executive apartment and EM over there. So there will be people wanting to buy. So I checked with my colleague who specializes in HDB, and he told me it's true, Darryl, that during that period of time, the supply was limited. In fact, not enough houses to meet the demand. So owner, whatever price that they put up, buyer will just come and take it up. So that's why there's a spike. So, but you see that once the demand is so-called fulfilled, then the prices also start to dip a little bit. All right. So this is generally the trend. So now the other thing is that, what about for those people who own a BTO? When's the best time to have the optimum point to sell your property? So thanks to my research department, in 2019, we compiled the transaction for 4-room flat price trend. We realized that on the year 8 is the best time for us really to sell, so that to maximize the cash, okay, the profit. And of course, you do not need to sell in the 8th year, you can sell in the 7th year, but this is some of the statistics we managed to gather. All right, so if you're BTO owners, okay, you can sell it upon the MOP is over, minimum occupation period is over, or you could sell it slightly a little bit later, okay? But if not, you start to realize that as the property, as the HDB ages, okay, you start to realize that it's actually a downward trend. So I'm using a 4-room, okay, and a 5-room because majority of Singaporeans do own these two types, okay? So you can see for yourself also here that the 5-room is also getting a downward trend after the 8th year. So if you're thinking of selling it, the best time to cash out is probably during this period of time. Okay, 7-8 years. Yeah. So now this is for HDB. Now let's look into another asset class. Okay, landed properties. Okay, so for landed property, I want to do a quote. Now there is this news article which has been which I've kept for a very long time because it was talking about the ERP. But I just want to share with you this. Okay, this is actually spoken by our late minister mentor. Okay, Lee Kuan Yew. He said this: if you own a property in Singapore, it cannot go down. It's a matter of time, and therefore we say land can only be bought by Singapore citizens. So you can see Singapore citizen out there, ladies and gentlemen, I just want to tell you this. If you have the money, please go and buy a landed property because, okay, not just because of what our MMLs say, okay, but I want to show you some research later on. Now, for landed property, this is the kind of characteristics. First, it is less speculative because it is governed by the Residential Property Act. What does Residential Property Act covers? It basically covers the fact that foreigners cannot own the Singapore landed property unless you have permission from the Minister of Law, which is unless you have a major economic contribution, you're a PR. If not, the chances of you even getting an approval from the land dealing approval unit is going to be extremely slim. Okay, now, so most people who buy the property is for their own stay, and if for those people who buy it and for whatever reason they want to rent it out, okay, generally the yield is a little bit lower. Okay, so if you buy now and you rent it out, of course you may not even cover your mortgage. I want to show you a chart. From here, I hope you could understand and appreciate what I'm trying to share with you. For 2013 to now, you can see that this is basically all the landed account added up together and then in all the district. But from here, no matter whether it's up or down, you can see that there is an upward trend in terms of prices, property prices, landed property prices. So this will be something good, and I'm very sure for those landed property owners out there, if you have bought it like 10 over years ago, I am very sure your property would have been 2-fold or 3-fold increase in terms of value. So congratulations for investing in a landed property. And you may say that, hey, Daryl, this is very general. Is there something that is very specific? So because I live in the East, I want to show you somewhere in East Coast Park. East Coast Park is interesting. If you take a look here, from the time of Asian financial crisis, okay, all the way to now, we see that there is a very good upside in terms of the game. All right. So the property that we are really looking into, at the end of the day, if you're buying those landed property, generally people will look for a freehold or super long lease type, like the 999 leasehold. Now, but there is another category of property which is leasehold, which is 99, and there is this this type of a development called a cluster housing. Now, the cluster housing is a really super so-called landed property, whereby you enter into a very comfortable price range, not as high as a land title kind of a landed property, but something very comfortable that give you also a lot of space. And this type of property also does appreciate in value. However, it is 99. So therefore, when you enter, this will be something that is more comfortable and it's not so expensive compared to the so-called freehold landed title properties. Okay, so you can see for yourself, this category asset class is really wonderful. So in fact, this coming Wednesday, my colleague will be sharing a lot more about landed property. So I will let him talk about this. So I want to go to another asset class, which is the office. Now, office is a commercial property. So if you look into the office, you can see that generally the capital appreciation are rather stable. Okay, so it's quite flat in other words. So, but maybe a little bit. But then again, these are just purely for District 2 because there's a lot more District 2 kind of office space that's available. I want you to also look at for this asset class, it's good for passive income. All right. You can see for the return yield in District 2, International Plaza, we are getting about 3.3%. Springleaf, we are getting about 2.9%. Eon is great, it's 4.1%. And then you move to District 1, Suntec City, fantastic, 4.7%. This is a great place, ready to invest for your office. And Shenton House as well, 5.1%. So these are what we are buying, and you're renting out, the kind of returns you can get. Okay, so this is the asset class. And then, of course, there's another asset class, is the commercial shop. These commercial shops, I will share with you that if you look into it, I kind of get all, of course, all the shops, commercial shops in Singapore, and you start to realize that actually the price kind of move within that bandwidth, right? And if you look and you draw a curve, okay, I take International Plaza, the shops, okay, there's not many type of transactions, or rather there's not many numbers of transaction, purely because the owner, the landlord, felt that this is a very good cash cow for them. It's a great passive income to invest in a commercial shop. So, and you start to see for over a period of time in International Plaza, the shops, you can see that the capital appreciation is relatively positive, okay? And then the rental is also positive. If I go to these slides and I show you, yes, over here you could see that, yeah, there is actually the rental returns is relatively a positive ingredient. So this is a great, another asset class that you can consider investing in. Now, I want to cover the asset class for the industrial. Okay, so we have covered the HDB, we have covered the landlord, we have covered the shop, the commercial offices. Now we cover the industrial. Now, industrial, interestingly, what you are seeing here is that when I use a commerce at Irving because this is my property, and I can show you as an investor, I enter into during, I think it's the 2013, and I think 2014 is the TOP period. And during this period of time, of course, we can see slight so-called increase in value. But if I intend to look into capital appreciation, then this asset class may not really be the one that will give me that kind of returns. So what I'm looking more for this type of asset class is more for the passive income, okay? And just take note for those people who are buying into the industrial, there's this thing called the seller stamp duty. So seller stamp duty does apply for the first 3 years after you actually own it, okay? So the first year I've got 15%, second year is 10%, and then the third year is 5%. It's only the beginning of the fourth year, then you're not subjected to seller stamp duty. So just do take note of this. Now, as you can see that the projection seems to be coming down from where we actually bought it from. So I want to share with you, for example, commerce at Irving. When I bought it, it's more for my own use. Then after that, I lease it out. But if you're going to buy it and hoping for capital appreciation, you just want to bear in mind that for industrial asset class, you can make some profit, but you must know when to exit. Okay, so and for myself, if I were to sell it now, I might not be able to fetch the kind of price that I even bought it. Okay, so I just have to be very mindful of the kind of investment that I invested in. Now, this another building that I want to use for this industrial, which is the Ubi 1. Okay, Ubi 1 is a 60-year leasehold property. The land lease starts from 2008. Okay, and it got TOP in 2011. And you can see that after this TOP, there's a lot of transaction. So as long as there's a healthy transactions, okay, you start to see that there is a appreciation in price because people always like to sell a little bit more than the so-called the previous sellers transacted, and all these prices can be made known, available in the public domain. So from here, you also start to see that it will also start to appreciate a little bit, but over a period of time, you start to see that it is on towards the downward trend. So for asset like this, it's very good for the industrialists to use it for your own so-called own use. Next, I want to focus on is the private residential. Okay, so the private residential, this is something which I will cover in a little bit more detail. Now, these are all the apartments that we're dealing with. Okay, this is generally the resale markets, okay, as well as those in the sub-sale. If you take a look here, in the property 7-year cycle, you will realize that as you invest in apartment, you will also start to see that there is a positive upward trend. Okay, so from 7 years ago to now, so this is really something that an asset class that you would really want to look into. All right, so I've covered with you all the various different asset classes, and right now I want to share with you how do you determine what are the 5 key factors when you want to invest in a property. Okay, so number one I want to share with you is, if you look into this screen over here, the first thing that we want to put into our investment, okay, the first thing that we want to consider is truly location. Okay, you say that, Darryl, I heard that many times. Yeah, that's true, because if you were to buy a property, okay, 10 years ago, let's say a freehold at Hillview, compared to say a Farrer Park, okay, 99 leasehold, you will realize that the Farrer Park 99 years leasehold is appreciating even faster than what you are seeing in the Hillview, right? Because location does matters. So I want to share with you whatever location that you want to invest in, whether is it north, south, east, west, doesn't really matter. Most important, why I put a map there is that make sure your property is close by to the MRT. Okay, so because for all investment property, you are targeting to be renting it out, correct or not? Okay, so if you're renting it out, then usually what does the tenant want? The tenants always want to make sure that their ease of transportation is taken care of. True? Okay, so because you must understand, if not every tenant will buy a car in Singapore, because car in Singapore is very expensive compared to where they came from. All right, so therefore they will definitely want to bring down these costs. So what are they then looking for? Are basically those property that is closer to the MRT. So now the key issue is then how far away should we position whereby the aspect will want to rent my property in terms of a distance between MRT to my particular locations. Okay, so I mean, based on our experience, I would say that anything that's less than 10 minutes is good. It will be the first choice. Okay, it's not that if you are above 10 minutes, the tenant will not rent a place. No, it's not true. It's just that there is a greater demand, okay, that will gravitate towards those estates that is about within a 10 minutes walk. Okay, I mean, if I take my daughter for example, you know, within 10 minutes walk is fine. Anything longer than that, I think they will melt under the sun. So so that is basically how even the aspects will also sees in terms of the distance. So 10 minutes is a good distance. It's probably about half a kilometer or slightly more than half a kilometer, depends on the pace. So that will be number one focus. Then Edge Property has done a great a survey last year, and they actually shows based on location, what are some of the key factors that they is really important to them. So from the left, you can see it's the first time home buyers. On the right is an investors. Okay, the first 3 category, okay, is their top choice, no changes at all. In terms of location, they will say that they would like to look for a property which is in a walking distance to the current or the future MRT. That's one. Second priority they are looking for is that it is better if it is near to a shopping mall, or if not, any F&B eateries. Okay, and then the third is that it is good if they could be able to have a walking distance to the lifestyle amenity like sports facility, parks, gardens, nature reserve, and things like that. So, and this is also one of the reasons that I want to share with you, that when you talk about location, probably the MRT is nearby and within that 10 minutes walking distance. Okay. However, if you start to realize something, that the first time home buyer, their the fourth top priority is differs slightly from the investor. For investor, they are looking into the master plan. Okay. Okay. So is this particular location a possibility of having a potential upside as a whole? Okay. For example, the Greater Southern Waterfront is that. So the properties over at the Greater Southern Waterfront will have a greater potential because of what potentially is going to happen over there, right? So that's the reason why we are seeing a lot of people also investing over at the Southern Waterfront area now. However, for the first timer, they are actually looking more for their own needs, right? So they're probably looking into something like a reputable primary school, okay? So these are some of the survey which HPROP has done, and I thought this is really something good to further enhance what I'm trying to share with you. Then now, so the first category, first factor that we look into is really the location. The second factor we look into is tenure. Okay, so tenure, I just want to share with you. So I pick up a location. So this location is in District 15. If you can see, it is at the sea view over here. Now, if you take a look here, over here, there's a combination of freehold as well as a leasehold. Now, for the freehold property over there, okay, if you look into their age, so one Amber Residences, okay, the TOP around 2011. And if you look into the leasehold, like the Shaw Residences, the Silver Sea, they kind of TOP 3 years down the road. Okay, so this is 2014. So effectively, they are actually quite close in terms of their age, right? So, but you look into this type of property, one leasehold, one freehold. But when you sell it in the open market, actually, the average price per square foot are generally not much of a great difference. Now, I say this because I want to point out to you, if you want to invest in leasehold, go ahead and invest in leasehold, all right? Don't worry about it, because at the end of the day, all right, if the prices that you sold will be quite similar, okay, in the open market if it is in the same locality. Now, having said that, what about freehold? Now, I also want to share with you, when it comes to freehold, there's some strength in the freehold. There's some positive thing about freehold. Okay, the next thing I want to share with you is about the age. Okay, first I share with you the location. Okay, the other one is the tenure. So it's one is L, the other one is T. Now I talk about is the age. Is the age of the property. Now, so it's LTA. Huh? So for you for easy remembrance. So if you look into Côte d'Ivoire, okay, for those who stay in Côte d'Ivoire, sorry, I just need to use this as an illustration. Based on the same locality, I can tell you Côte d'Ivoire is located in a very fantastic location because you are just next to a Marine Parade. Okay, so it's Marine Parade, or rather Parkway Parade. Okay, Parkway Parade, and you are seeing currently the prices over here on average is about 1,242 per square foot. Okay, but you must understand how old is this development. This development, the land lease starts from 2001, TOP in 2004. Okay, and so when we are comparing this and with the one that is younger, leasehold, you will start to see that the price appreciation do have some resistance. Okay, so this is nothing to hide. This is the truth. So if you're buying leasehold, ladies and gentlemen, you really need to know exactly when to capitalize on it. And this is what I'm going to share with you a little bit later on. However, I also want to point out for those freehold property owners, you realize that, you know, this is 2008 TOP, 4 years difference from Côte d'Ivoire, okay? But however, you can see they are still holding on to their value, Okay, so for those people who says that I buy property for eternity, that one. So freehold is really good because then there's something that you can look for. But I just want to talk to those people. It says that I want to buy for investment, and what is the best bet right now? You can look into leasehold. Not necessarily need to buy freehold, but you can. But freehold is great because you can hold for a long time. But leasehold, you can hold it, and then TOP, just like what I did for my Travesta. I buy TOP, wait for a while, I sell it off, I make the money. And if you can do that and repeat the cycle every 3-4 years for one particular project, you can make about $100,000. Okay, and you can go for maybe 4 cycle. Okay, so so that will give you a very decent 700,000 profit for literally investing into property. Okay, so since we are in Singapore, and our land real estate is really like a gold mine, might as well use it. Okay, so this is my advice to all of you. And then I have no particular any relationship with Lake Home development. I just want to use this as an illustration. For those people living in the West, Lake Home, it was launched in 2003. And then for people who actually buy during this early phase of our time, you will realize that you're buying like less than $500 per square foot. And it's TOP in somewhere in 2005. And see what happened? The prices appreciate. Okay, so until it peaked, just like a mountain, it will peak at the top. 2013, and after that, what happens? It slide down a little bit. Okay, it looks like it's going for a downward trend. Now, for those people who actually own a lake home, maybe it's a good time for you to consider, if you especially so if you have bought it in a very early stage, to consider to selling it and to buy something newer. Okay, in the West, if you like West. Now, I want to use another example to quote what I'm sharing. I use the sale at Marina Bay, very nice project. Okay, and see what happens for those people who actually buy in the early stages. And what happens here is that you can see that the graph just shoot up, the prices just goes up. But somehow you say, hey, Daryl, in TOP, you say that you make no profit. But I also want to tell you that and TOP, during the TOP period of time, 2008, that is actually the time of the global financial crisis. Okay, so this is a global financial crisis, and so therefore it kind of tapered off. But you know something, in the global financial crisis, it didn't dive down that much. It just kind of like slightly taper off. And after recovery in 2009, it it rebounds strongly back again. And after that, in about 2011, it peaked. And ever since from that point in time, the price seems to be towards on the declining stage. Okay, so for those people who owns this property, yeah. So you may say that, will it ever shoot up again? Well, I do not know the future, but you must understand that the property do age. As the property do age, it does affect several factors. One of the factors is the utilizations of the CPF, right? So people who want to buy the property, the age plus the remaining lease must make sure that they are able to live there up to 95 years old. Then they can use the full CPF. So these are a lot of considerations when people are buying this. So for people, it says that, okay, you're not too sure whether you are currently holding a leasehold property and you're not really sure whether to hold on now or to sell it off. I want to share with you, go back to your salesperson and check with them. They will be able to give you the trend as I've shown you, and then they will be able to advise you as well to whether or not it's a good time to sell. Okay, but if your property is on the uptrend, then continue to ride the wave until you feel that, okay, this is a max, and then you just let go. Okay. Okay, so I cover on the location. What are 5 factors? Locations, tenure, and age of a property. Now, the next one, the 4th one, is about the size of a development. Now, I did share with you the UB one, right? During a time when there's a lot of transaction, you can see that there is a nice positive gradient. So same thing for a development. When you buy investment development, a development for investment, you will really want to buy one which got a decent size, okay? Whereby you will start to see there's a healthy rental transaction, some sales transactions, so that you will start to see there is a what? Appreciation in terms of value, okay? And also, if you have a decent size, what happens here is that the whole entire development will contribute to the maintenance of the particular development. So after, when the MCSC call for an AGM on a yearly basis, you realize that basically your cost per share value don't really need to appreciate that much. So for projects that is a mixed development, whereby your development, your MC is able to collect even so-called the parking, right? Because yours got some commercial entity to mix with a residential entity, then these are even better, because some of these commercial entity, the money that you receive could really come and take care of the whole entire property around the estates, right? So you will see that your so-called cost per share value will not increase that much. Why is it so? Why do you need to take care of it? Because these are a monthly recurring cost. If you're doing investment, you want to look into what are the recurring costs, and this is one of the key recurring costs that we need to contribute as the owner of a property to the management fee. And out of these three, it will affect your exit strategy. Okay, so exit strategy, as I say, is very important in every investment that we're talking about. So property is not forever. Though some of you may want to hold forever, but for those people who are doing investment, once you hit a certain optimum level that you decided, you will want to sell it off. So you want to sell off a property which people will want to buy. Now, at the same time, I want to share with those people that it says that, what about I want to buy a property that is not so many units, because I do not need so many facilities. I want to look for a smaller one. Now, definitely, okay, by all means, go ahead, because small development, they may not have a lot of facilities, so therefore the cost of maintaining the property may not necessarily be that high as well. So I'm more focused on property investment kind of projects. Okay. So for owner occupied, yes, please, small projects is great for you, because there's less, moving in, moving out of the rentals, okay, tenants. Lastly, I want to focus on is the pricing. Okay, so we cover location, we cover the tenure, we cover the age, and then we cover the S, okay, which is the size of project. Finally, we cover the P, okay? So it's a pricing strategy. Pricing strategy is very important, okay? Now, if you're buying the resale market, how do you know that you're buying at a market value? You ask a valuer. If not, you ask your agents, all right? Then agent will be able to advise you. If not, you will go to URA caveats and go and check it out, okay? What is the latest transaction around there, okay? Or for HDB, you will check with the HDB website. But what about projects? How do you gauge a good value, okay, to buy those projects that's building under construction? I want to share with you, okay, this is something that is not so-called regulated, but this is something that over a period of time, I use it, okay, to gauge whether or not this is something quite worth the while. There are 4 components, as far as I know, okay, with regards to factoring into the selling price. One definitely is the land price. Second, construction costs. Third is your development miscellaneous costs. Okay, many of those things, from property taxes to water, utilities, so many of those things, right? And then finally, the profit margin. Now, I want to share with you, for those people who say that is this the best time to buy? I want to tell you that as of now, okay, like no other time, I want to share that, I hear some clients say that, hey, I just want to wait for a while, maybe the prices will correct by itself. I want to tell you that when the developer buy, you can see out of the 4 factors, there are 3 factors that's cost. So there is something heavy on them. Okay, the land cost, the construction cost, and all the other development miscellaneous costs. Okay, so no matter what, they will never sell at the break even. So that's the truth. If I run a business and all I do is just get a break even, then why am I doing this for, right? So no matter what, at the end of the day, the cost is always increasing over a period of time. after this whole entire so-called COVID recovery, I think the cost also will start to increase. Okay, so you can see that therefore to ask for to wait for the prices to drop, I think it is not really quite possible. I really think that this is one of the best time to really enter into the market. Okay, so if you look into the construction cost, outside the central region, $300 per square foot. The rest of the central regions, like what I'm going to share with you, is $350 per square foot in terms of construction cost. Core central regions, $450. So these are indicative construction costs that I kind of gathered from the DCA, add in the inflations, add in a little here, and then this is something that's I check, and I think that this is really indicative construction costs. Now, the disclaimer, of course, please take note, this is used primarily for appraisal, for your budgeting, okay? It is not the actual cost of building, okay? Because the actual cost of building will very much depend on, first, the design, how wonderful this whole design will look like, okay? And then the site condition, is it very difficult to drill, or is a normal soil kind of concept? And many other factors, really, that does affect the whole entire construction. But I use this so that we can do some simple calculation later on, okay? And also take note that we are just talking about a flat ground. We're not talking about those that got basement type. I use a particular project, the Park Esta project. Okay, I live in the East. I love East, so I love this project as well. And if you take a look here, the land price is 909 per square foot. Construction 350. You add up 1 and 2 together, and then you factor in the miscellaneous development cost. The break-even estimate probably about 1448 per square foot. Okay, and the good value. Okay, what is the good value? The good value, you add in maybe a profit margin of probably about 15%. Okay, is probably about 1665 per square foot. So this is an average per square foot that we are talking about. Usually we are talking about those 3-bedroom kind of references. Now, for those that are buying at a 2-bedroom, definitely in terms per square foot, you will always be higher. You take a look at my example just now. When I buy a 3-bedroom and a 2-bedroom Trivesta, the price difference is a lot, okay? So, but to give you a gauge, an average per square foot price, this is probably what we're talking about. So the last, I checked a couple of days ago, what currently they are still selling. A 3-bedroom current asking price at the 5th floor is about 1633 per square foot. So it's very reasonable. The next one I want to cover is called, the case study is called an M. Now the M, the land price is 1450. Now what is this M? This is at the CCR area, right? This is the central core area. And then the construction cost, we put it because it is at the CCR area 450. Break even, we estimate plus miscellaneous cost 2195 per square foot. Good value around 2523 per square foot. So this type of 2523 per square foot average price, referring more to the slightly bigger unit, not the 1-bedroom, right? So, and I also checked a couple of days at the same time when I checked Park Esta, I checked that on the 12th floor, there's actually a 2-bedroom study that's going for 2486 per square foot. Now, I just want to share with you, this is basically how we could help customers, okay? If you are looking for buying a property, you know, you can go and ask your real estate salesperson. They will be able to tell you whether this is really a good buy or not, okay? So in conclusion, I'm coming to a conclusion. Sorry, I think I overrun a little bit, but I have 7 I's to share with you. Number 1, you invest during crisis period because this is the best opportunity. I think Warren Buffett has said this, you know, it's greedy when people are fearful. It's fearful when people are greedy. So you invest during this crisis period. It's the best opportunity. If you don't invest now, when you invest? You want to invest when the property prices going up, because as the days goes by, as the months goes by, as the years goes by, our property prices is not going to come down. It's going to be, as I share with you from the very beginning, first slide, it is going to be an upward trend. Okay, because this is Singapore. Singapore left to right 40 kilometers, north to south 20 over kilometers. Add up together, what are we having? We are having over 700 over square kilometers. So our real estate is a gold mine. So any property that you buy now, over a period of time, you will start to see capital appreciation. Next, you invest early rather than later. I am very thankful I invest early when I was in my 20s, when I bought my HDB flat. Now, No, I'm happy because I got a ROI of 20%. Okay, then invest in residential property first before venturing into commercial. So that's my advice. Okay, you can take it, or if not, it's up to you. Then you invest in industrial primarily for your own use. Okay, so if you have a needs for the industrial space, go ahead and buy it. As you are industrialist, go ahead and buy for your business purposes. Now 5, okay, invest using the 5 factors that I share with you: the LTA, location, tenure, age, sales and purchase, not sales and purchase, S&P is size and price. I'm so used to S&P, okay? So try to find undervalued property in the resale market if it's possible. Now, when you are buying in with the developer, all the price is the same, okay? So there's no changes whatsoever at all. But if you're in the resale market, yes, you can always ask your salesperson to help you to find if there's any undervalued property, okay? But again, I want to share with you, today, a lot of people are able to hold on to their property. So they have really a strong holding power. Number 6 is invest locally first, okay, before venturing overseas, okay? So Singapore, the great thing about owning property in Singapore is that Singapore has no so-called inheritance tax. If your property is to leave behind a legacy for your kids or your next of kin, I want to tell you that there is no inheritance tax whatsoever at all. Okay, the additional buyer stamp duty and buyer stamp duty is not applicable when you are passing inherited property to the next person, the beneficiary. Okay, so this is really a wonderful so-called wealth planning. Okay, for your next generation. Next is seller stamp duty. Seller stamp duty, you know that if you own the property for the first 3 years, you're subjected to seller stamp duty. Now, for the inherited properties, the seller stamp duty can be based on the date of acquisition. That means to say, if let's say the parents own it, maybe bought it 5 years ago, the next of kin, the kids maybe own it and then want to sell it. Okay, what happens here is that he could sell it immediately without worrying about seller stamp duty. So that's the beauty of it, okay, in Singapore investment. Finally, the last point is current interest rate is really at all-time low for this period of time. Okay, if you have an investment property, I will urge you to speak to your real estate salesperson, because we have compiled a whole entire list of all the banks, and then you can go and hunt for what are the banks that best work for you, and then you can refinance it. Okay, so this is really something wonderful. Okay, and you should refinance now, because I realized that the bank do adjust the rate upwards. Okay, because I think this is probably the lowest as of now. So, ladies and gentlemen, this is the last 15 minutes I've been talking about investment, and I just want to wish everybody stay safe and stay rich. Okay, happy shopping for your investment property. PK, I hand over to you.
Awesome, awesome. Thank you, Daryl, for your insightful presentation.